Scott Lennington, stay beside the truck.
I am here about storm work. Why are police in the driveway?
Quincy homeowners reported claim money taken and roofs left
Storm
unrepaired.
jobs take time. Nobody understands how slow carriers move.
Once is a mistake. Twice is suspicious. Scott Lennington did this to at least 27 families across 3 banks and 2 states, and left a paper trail leading straight to a riverboat casino. He drove south to do it all over again before they caught up with him.
Every delayed roof after a hailstorm into a theft case before anything is proven.
He was 1,100 miles from Quincy, Illinois, with sand on his boots and a fresh tan, and he still thought he was going to walk away from this. Within 48 hours, Pinellas County deputies would hand Scott Allen Lennington off to Adams County prosecutors, holding a 23-count indictment with his name on it. 27 families, at least $220,000 in stolen insurance money, 3 bank accounts at 3 different banks, forged signatures on every check, and a casino floor in East Peoria where the money meant to put roofs back over those families' heads had been fed, dollar by traceable dollar, into a sportsbook account. Quick question before we go any further. If a stranger knocked on your door the morning after a storm and told you he was a licensed insurance adjuster who could handle your whole claim for you, would you let him in? Drop a comment and let me know. Honestly. And if you're new here, hit subscribe. This channel covers the people who weaponize trust against working families, and stories like this one don't get the coverage they deserve. Scott Allen Lennington was born in 1976 in Peoria, Illinois, and raised about 10 miles east in the village of Morton, a flat, tidy town of roughly 17,000 people, best known statewide for its annual pumpkin festival and the Libby's processing plant that supplies most of the canned pumpkin in the country. His father worked maintenance for the city. His mother was a part-time bookkeeper at a small accounting firm off Main Street. They lived in a vinyl-sided ranch house on a curving street of identical vinyl-sided ranch houses, with a chain-link fence in the back and a 2-car driveway in the front. He was the middle of 3 kids. The neighbors remembered him as polite, talkative, and quick with a joke. The kind of boy who could get an adult laughing within 30 seconds of meeting them. That talent would matter later. He attended Morton High School from 1990 to 1994. He played junior varsity football for 2 seasons, never made the varsity roster, but stayed close to the team as an equipment manager his senior year. His yearbook quote was a line from a Garth Brooks song. His report cards were unremarkable. He earned a 2 4-grade point average, took shop classes, and graduated on time without honors and without trouble. He did not go to college. In the fall of 1994, he took a job at a tire and lube shop on Detroit Avenue, making $7.25 an hour, and he stayed there for almost 3 years. The shop manager remembered him as a good talker who hated the actual mechanical work. He kept asking for the front counter job, the one where you wrote up the invoices and explained the repairs to the customer. He got that job, eventually, and his commissions on tire upsells doubled within 2 months. That was the pattern. Scott was not a mechanic. He was a talker. Every job he held in his 20s followed the same trajectory. Hired for one role, drifted into sales within a year, outperformed expectations on commissions, got bored, moved on. By 23, he was selling vinyl siding for a home improvement contractor working out of East Peoria. By 26, he was selling extended warranties at a used car lot in Pekin. By 29, he was managing a satellite television installation crew based in Morton, going door to door with a clipboard and a polo shirt and convincing retirees on fixed incomes to upgrade their packages. He was good at it. He was very good at it. His supervisor at the satellite company told investigators years later that Scott could read a homeowner in under a minute. He could tell who needed to feel respected, who needed to feel smart, who needed to feel taken care of. He adjusted his pitch to fit every single time. He married in 2002 a woman from nearby Washington, Illinois, who worked as a dental hygienist. They had 2 children, a boy and a girl, both born before Scott turned 30. They bought a 4-bedroom house on a cul-de-sac in Morton, with a deck he built himself out of pressure-treated lumber, and a basement he finished into a sports den with a leather sectional facing a 60-inch television. He coached his son's little league team for 3 seasons. He grilled bratwurst in the driveway on summer evenings. He drove a white Chevy Silverado that he washed every Saturday in the front yard. To everyone in Morton, Scott Lennington was a regular Tazewell County family man. Loud at the bar, reliable on the team bench, generous with a round, the kind of guy who would help you move a couch on a Sunday and refuse the $20 you tried to hand him afterward. That was the version of Scott that his neighbors and his in-laws and his son's little league parents knew. And underneath it, quietly, was another version. The version that drove 40 minutes east to the Paradise Hotel Casino on the Illinois River in East Peoria on weeknights, alone, and sat at the sportsbook windows feeding cash into wagers on Bears games, Cubs games, college basketball, anything that was moving on the board. The version that opened an online sportsbook account in 2019, the year Illinois legalized mobile sports betting and started losing four-figure sums in single weekends. The version his wife began to notice in the bank statements, then stopped noticing because she stopped opening them. By the time the hailstorm hit Quincy on a Sunday afternoon in June of 2024, Scott Lennington was 48 years old, deep underwater on personal debt, and 3 years into holding the one professional credential he had ever bothered to earn. An Illinois public adjuster license, National Producer number 190-33762, issued by the Illinois Department of Insurance. That license was about to become a weapon. A public adjuster, by Illinois statute, is a licensed professional who represents the policyholder, not the insurance company, during a property damage claim. When a homeowner's roof gets shredded by hail, or a kitchen fire wipes out their drywall, or a burst pipe floods their basement, they can hire a public adjuster to handle the claim on their behalf. The adjuster documents the damage, negotiates with the insurance company, and shepherds the claim from the first phone call to the final settlement check. In exchange, the adjuster takes a percentage of the payout, usually somewhere between 10 and 20%. It is a profession that exists because insurance claims are complicated, stressful, and stacked in the insurer's favor. A homeowner standing in their kitchen with the ceiling caved in does not want to spend 40 hours reading their policy and arguing about depreciation schedules. They want somebody who knows the language of insurance to fight for them. That is the job. The license itself is not difficult to obtain in Illinois. An applicant pays a fee, takes a state-administered exam, undergoes a background check, and posts a surety bond. Continuing education requirements are minimal. Once the license is issued, the public adjuster is given a national producer number, an entry in the Illinois Department of Insurance's online registry, and the legal authority to walk up to any front door in the state and identify themselves as a licensed professional. The system relies, fundamentally, on trust. The homeowner trusts that the person standing on their porch, holding a state-issued license, actually intends to do the work. The insurance company trusts that the payment they wire or mail to the adjuster will be passed through to the contractor doing the repairs. The Department of Insurance trusts that licensed adjusters will respond to consumer complaints when they are filed. There are checks built into the system, but they are slow. The producer regulatory unit at the Department of Insurance handles licensing and discipline. The consumer complaint unit takes intake on grievances. When a complaint is filed, the department sends the adjuster a letter requesting a response within a fixed window. If the adjuster does not respond, the department sends another letter, then a phone call, then, eventually, a referral to enforcement. The cycle can take months. In a state with thousands of licensed adjusters and a small enforcement staff, a determined bad actor can ride out a dozen complaints before anyone formally intervenes. There is one more layer to the system that mattered for this case. In Illinois, when an insurance check is issued on a property claim, the check is typically made out to the homeowner and to any mortgage lender or adjuster of record listed on the policy. The check must be endorsed by every named payee before it can be deposited. That endorsement is the last line of defense. If the homeowner's signature on the back of the check is forged, the bank that accepts the deposit is supposed to catch it. In practice, with modern remote deposit and mobile check imaging, banks catch almost none of it. That was the system Scott Lennington walked into the morning after the Quincy hailstorm. a licensing scheme built on trust, a complaint process built on patience, a banking process built on speed, and homeowners standing in their front yards looking up at roofs that had been hammered into a pulp the night before, ready to listen to anyone who said the right words. The storm hit Quincy, Illinois, on a Sunday afternoon in June of 2024. Hail the size of golf balls came down for about 20 minutes across the western edge of the city, the part that sits on the bluff above the Mississippi River. By Monday morning, every roofing contractor in a 100-mile radius had a backlog of estimate calls. By Tuesday morning, Scott Lennington's white Silverado was rolling into Quincy with a ladder strapped to the bed and a stack of business cards on the dashboard. He worked the neighborhoods that had taken the worst hit. He knocked on doors. He introduced himself as a licensed insurance adjuster, which was technically true, and he handed over a glossy business card reading Hagel Claims, LLC, with a Morton phone number and a national producer number printed in the corner. He told homeowners he could handle the whole process for them, file the claim, document the damage, coordinate the repairs. They would not have to lift a finger. For homeowners who had spent the morning staring up at a roof that looked like it had been shotgun blasted, it was a relief. They invited him in. He sat at their kitchen tables. He filled out the paperwork. He had them sign an agreement designating him as their public adjuster of record. And then he drove back to Morton. The first claim came back from the insurer about 3 weeks later. The check was for a little over $12,000. It was made out to the homeowner and to Scott Lennington as the adjuster of record. Lennington drove to the homeowner's house to pick it up, told them the repairs would be scheduled within 30 days, and then drove straight to a Better Banks branch in Morton and deposited the check into his personal account. He had signed the homeowner's name on the back. He had not asked permission. Then he did it again. The second claim came back a week later. Same pattern. The third came back 4 days after that. By the end of July, Scott Lennington had collected and converted 4 separate Illinois insurance checks at Better Banks, totaling $59,570.28. Of that, $136,000 eventually moved through that account and into 2 personal checking accounts in his name. $22,170 went out as checks to sports gambling companies. He opened a second business account at Busey Bank when the activity at Better Banks started to feel concentrated. $86,642.18 in claim payments for 4 more consumers landed in that account. From that account, he made $110,222.37 in cash withdrawals. He authorized $41,200 in checks and transfers to online gambling sites. When the activity at Busey Bank started attracting questions, he opened a third account at Heartland Bank and Trust. $73,847.32 in claim payments for 5 more consumers went through that one. $43,551.46 came out in ATM withdrawals. One of those ATMs was at the Paradise Hotel Casino in East Peoria. Another $114,833.80 flowed directly to various sports betting entities. 3 banks, 13 victims, over $220,000 in stolen insurance money. And not a single roof in Quincy had been repaired. Every dollar of it followed the same arc. Hail damages a roof. Homeowner signs a contract with a man holding a state-issued license. Insurance company issues a check. License holder forges the homeowner's signature. Check clears. Money moves through one of 3 personal accounts and then out again, dollar by dollar, into the sportsbook accounts and the casino ATMs. The pattern was simple, repeatable, and almost invisible from the outside. Each individual claim looked normal from the insurer's perspective, a routine hail claim, paid out to a licensed adjuster. Each individual deposit looked normal from the bank's perspective, a check coming in, cash and transfers going out. The only people who knew anything was wrong were the homeowners, and the homeowners had been told the repairs were coming soon. The first complaint to the Illinois Department of Insurance came in on July 27, 2023, almost a full year before the Quincy hailstorm. It was filed by an earlier customer from a previous job, an unrelated roofing claim where Lennington had pocketed the check and walked away. The department sent him a letter requesting a written response. He did not respond. The second complaint came in 3 weeks later. He did not respond. The third complaint came in 2 weeks after that. By the end of 2023, the department had received 6 complaints against Scott Lennington and Hagel Claims, LLC, alleging the same pattern. Claim payments collected, repairs never performed, follow-up calls ignored. He had responded to none of them. Through the first half of 2024, complaints continued to trickle in. Then the Quincy hailstorm hit, and the trickle became a flood. By mid-July of 2024, homeowners on the western bluff of Quincy were starting to compare notes. One neighbor mentioned at a backyard cookout that the nice man from Morton who had handled their hail claim had stopped returning calls. A second neighbor said the same thing. A third neighbor said she had driven by his Morton address listed on the business card and found a residential property with no signage. By the end of the week, 5 Quincy homeowners had filed formal complaints with the Department of Insurance, and 3 of them had walked into the Quincy Police Department to file reports. The Quincy Police Department opened a case file in June 2024. A detective named Caleb Moen, a 15-year veteran of the department who had spent the prior decade working financial crimes for the Adams County Sheriff's Office, was assigned. He started where every fraud investigator starts. He pulled the public adjuster license records. He confirmed Scott A. Lennington of Morton, Illinois, national producer number 190337662, was the same person every Quincy victim was describing. He confirmed Hagel Claims, LLC was a real Iowa-registered limited liability company with Lennington as registered agent and a Morton, Illinois business address at 750 West Jefferson Street. He confirmed Lennington had a valid public adjuster credential at the time the Quincy work had been performed. And then he started pulling the bank records. That was when the catalyst stopped being individual victims and started being a paper trail. Detective Moen subpoenaed Better Banks first, then Busey Bank, then Heartland Bank and Trust. He pulled deposit histories. He pulled withdrawal records. He pulled the imaged copies of every check that had cleared into Lennington's accounts in the prior 18 months. And he started laying them out, one by one, on the conference room table at the Quincy Police Department, alongside the names of the homeowners on the complaint list. Every check matched. Every signature was wrong. The forgeries were not even subtle. On some of the checks, Lennington had attempted to copy the homeowner's signature from the original engagement paperwork. On others, he had simply scrawled an approximation. On at least 2 of them, he had spelled the homeowner's last name incorrectly. That was the catalyst. Not a single dramatic moment. Not an overdose. Not a whistleblower. Not a sting. A detective sitting in a conference room with a stack of bank-imaged checks, comparing forged signatures to genuine ones, finding the mismatch every single time. By the time Moen finished, he had a binder almost 3 inches thick, and Scott Lennington was 800 miles south, watching the Weather Channel. Stories like this one don't get the attention they deserve, because the victims are not famous, and the dollar amounts are not 9 figures. They are working people whose roofs got hit by a storm and whose insurance money got stolen by a man who held a state-issued license. If you want to keep seeing accountability content like this, subscribe and hit the notification bell. We're heading into the investigation and the arrest next, and the way this case unraveled is worth sticking around for. The investigation moved on 2 parallel tracks. The Quincy Police Department, working with Detective Moen, was building the criminal case for the Adams County State's Attorney's Office. The Illinois Department of Insurance, working from its Springfield office, was building the regulatory case. The department's producer regulatory unit and consumer complaint unit had been trying to reach Lennington since July of 2024. Between July and November, they had placed 3 phone calls and left voicemails on the Morton number listed on his business card. They had sent 3 separate email requests to the address on file. They had mailed 1 certified letter to the 750 West Jefferson Street address in Morton, return receipt requested. The certified letter was signed for. Lennington still did not respond. Of the 27 consumer complaints that had been filed against him in the 18-month window between July 2023 and January 2025, he failed to respond to 21 entirely. The remaining 6 received responses so brief and non-substantive that the department classified them as inadequate. While the department compiled its administrative file, Detective Moen kept pulling threads. He matched each forged check to the named homeowner. He cross-referenced ATM withdrawal records against Lennington's known locations and turned up the Paradise transactions in East Peoria. He pulled the sportsbook records through subpoenas to the gambling operators. He documented over $178,000 in transfers to sports betting platforms and online gambling sites. Then he started looking for Lennington himself. By October of 2024, Lennington was no longer answering his Morton phone number. His Silverado was no longer in his driveway most days. His wife, who had filed for divorce earlier in the year, told investigators she did not know where he was staying. Neighbors said they had seen him loading the truck one weekend with luggage and fishing gear, and they had not seen him since. Investigators developed a working theory based on the pattern of his banking activity. Hurricane Helene had made landfall in Florida's Big Bend region on September 26, 2024. Hurricane Milton had followed on October 9th, slamming into the Gulf Coast and causing widespread roof damage from Tampa down to Sarasota. Storm-chasing contractors were already flooding into the affected areas. The same playbook that had worked in Quincy in June, knock on doors, claim to be a licensed adjuster, take the check, disappear, would work again with a fresh population of desperate homeowners and a fresh set of insurance companies cutting checks. Moen filed his findings with the Adams County State's Attorney's Office. A grand jury was convened. On November 21, 2024, the grand jury returned an indictment against Scott A. Lennington on 23 counts. 10 counts of theft over $10,000. 9 counts of home repair fraud. 4 counts of aggravated home repair fraud. A nationwide arrest warrant was issued the same day. The warrant was distributed through the National Crime Information Center database. Lennington's photograph, license plate, and known associates were entered. Within a week, the U.S. Marshals Service was looking for him in Florida. Local police agencies along the Gulf Coast were briefed. A pattern emerged from credit card and toll transponder activity that placed him moving along the I-75 corridor through Tampa and St. Petersburg. By early December, investigators had narrowed his suspected location to a beachside community on a barrier island off the Florida Gulf Coast called Treasure Island. On the afternoon of December 13, 2024, members of the Pinellas County Sheriff's Office and the Treasure Island Police Department converged on a rental condominium 2 blocks back from the Gulf, where surveillance had placed Scott Lennington for the prior 6 days. He had checked in under his own name. He had paid in cash. He had been seen most mornings walking down to the beach with a thermos and a folding chair, and most evenings walking up to a sports bar on Gulf Boulevard called the Sloppy Pelican to watch college football. The deputies waited until he came out of the condominium just after 1 in the afternoon to drive into town for lunch. They approached him in the parking lot, 2 unmarked units blocking his rental car's exit. The lead deputy identified herself and asked him to confirm his name. "Are you Scott Allen Lennington?" "Yeah, what's this about?" "Sir, we have a warrant out of Adams County, Illinois, for your arrest. I need you to keep your hands where I can see them." "Adams County? I don't even live in Adams County. I'm from Tazewell County. This is a mistake." "Sir, the warrant was issued out of the state's attorney's office in Quincy. 23 counts, theft and home repair fraud. Do you want to tell me about the roofing jobs in Quincy last summer?" "I want to talk to a lawyer." He was placed in handcuffs in the condominium parking lot. The deputies recovered a laptop, 2 cell phones, a stack of business cards reading Hagel Claims, LLC, and a folder containing what appeared to be partially completed insurance claim paperwork for 3 Florida homeowners. The Florida homeowners' names were later cross-referenced against fresh hurricane claims filed with insurers operating in the Tampa Bay area. All 3 were active. None of them had received any repair work. Lennington was transported to the Pinellas County Jail and booked on the out-of-state warrant. His bond was set at $150,000. He was held pending extradition to Adams County, Illinois. During the booking interview, when a detective asked him whether he wanted to make a statement about the Illinois charges, he repeated the line he had given in the parking lot. He wanted a lawyer. He stopped talking. He did not speak again to any law enforcement officer that afternoon. Investigators contacted the Pinellas County Jail intake officer the following morning. Lennington had requested no visitors. He had made one phone call to a number in central Illinois. He had eaten the standard tray. He had slept. The Quincy Police Department issued a brief press release. The Illinois Department of Insurance posted an update to its website. Local media in both Quincy and Treasure Island ran the story. The mugshot circulated. In Quincy, the homeowners who had been waiting 6 months for their roofs saw the photograph and recognized the man who had stood at their kitchen tables. They started calling each other. They started calling the Adams County State's Attorney's Office. The complaint count, already at 27, continued to climb. Scott Lennington was extradited from Pinellas County, Florida, to Adams County, Illinois, in the final week of December 2024. He arrived in Quincy in a transport van and was processed into the Adams County Jail on the 23-count indictment that had been waiting for him since November. The charges carried serious weight. Under Illinois law, each count of theft over $10,000 is a Class II felony, carrying a sentencing range of 3 to 7 years in the Department of Corrections. 10 of those counts. Multiple counts of home repair fraud and aggravated home repair fraud carry additional felony-level sentencing exposure under the Illinois Home Repair Fraud Act. If the counts were run consecutively at the high end, the potential exposure stretched into decades. Even a conservative plea offer on a fraction of the counts would have left Lennington facing years of state prison time and a restitution order for the full $220,000 in stolen claim payments. The criminal case, as of the most recent available reporting, remained pre-trial. No plea had been entered. No verdict had been returned. No sentence had been imposed. Scott Lennington had been arraigned, bond conditions had been set, and the case had moved into the slow grind of pretrial motions, discovery, and scheduling conferences that takes most Illinois felony cases between 1 and 2 years to resolve. He was represented by retained counsel from a Peoria criminal defense firm. The Adams County State's Attorney's Office indicated to local reporters that they intended to pursue full restitution on behalf of all identified victims. The regulatory case moved faster. On March 4, 2025, Acting Director Ann Gillespie of the Illinois Department of Insurance issued a formal order of revocation. The order stripped Scott A. Lennington of his public adjuster license. It stripped the public adjuster license held by Hagel Claims, LLC, and it assessed a $100,000 civil penalty under Section 1555 of the Illinois Insurance Code on the basis of his sustained pattern of taking client funds, failing to perform contracted work, and failing to respond to 21 consumer complaints from the department. The findings in the department's order read like a forensic accountant's reconstruction: $59,570 at Better Banks, traced to 2 personal accounts and sports gambling checks; $86,642 at Busey Bank, traced to cash withdrawals and online gambling transfers; $73,847 at Heartland Bank and Trust, traced to ATM withdrawals at the Paradise Hotel Casino and to sports betting operators; $220,000 in stolen homeowners' insurance money, not $1 of which had ever been used to repair a roof. In Quincy, the practical reckoning fell on the 27 families who had filed complaints and on the dozens more who had paid for adjuster services and gotten nothing back. Some of them had paid out of pocket for the repairs themselves, financing the work through home equity loans or credit cards. Some of them were still living under tarps when winter came. 2 of them lost their homeowners' insurance policies entirely because the carrier dropped them after the claim went unresolved. None of them had received restitution as of the most recent reporting. None of them expected to see the full amount returned, even if a conviction was eventually secured. What the public record will eventually settle for Scott Lennington is, at this moment, still being negotiated in an Adams County courtroom. What the public record already says is the part that matters most. He held a state-issued license. He used it to walk through 27 front doors. He took checks meant for repairs that families had been counting on. He forged their signatures. He deposited the money into 3 separate bank accounts. He fed it into the slot machines and the ATMs at a riverboat casino on the Illinois River and into sportsbook apps on his phone. And when the complaints started piling up at the Illinois Department of Insurance and the detective in Quincy started pulling the bank records, he packed a suitcase and a fishing rod and drove south to Florida to run the same playbook on a new set of victims. The roofs in Quincy are still there. The hail damage on some of them has been patched, repaired, or replaced by the homeowners themselves at their own expense. The rest are still waiting. The man who promised to handle the whole thing for them is currently waiting on a trial date in a county he had hoped never to see again. This case was disturbing, but the case on the right-hand side is even more outrageous. Click it now.